let's take a look at both of these food delivery and quick commerce players and compare what Q2 has looked like for them. First up, on the back of their revenue, that for Zomato came in at 4,799 crores, for Swiggy at 3,601 crores. So both of them have come in line with what we were expecting. If you take a look at the EBITDA for Zomato, that's come in at 226 crores. For Swiggy, it's an EBITDA loss for 554 crore rupees. So for Zomato, it was a beat on our expectations, but Swiggy, it's a miss because the loss has dropped, in fact, widened further than what we had expected. If you take a look at net profit, Zomato is an already profitable company, net profit coming in at 176 crores. However, for Swiggy, the net loss has also widened on a sequential basis, coming in at 625.5 crore rupees. Now, if you take a look at a comparison across metrics, then the overall adjusted EBITDA is a metric that quick commerce players and food delivery players use to measure their profitability. So that for Zomato in Q2 came at 330 crore rupees versus for Swiggy, it's a loss of 341 crores. The GOV, the gap in the GOV is also quite significant because the gross order value for Zomato has come in at 17,670 crores compared to Swiggy at 11,306 crores. So that gap is also quite significant. Lots of catch up that Swiggy needs to do going ahead as well. Gap in the food delivery GOV is not that high, but the quick commerce GOV, well, it's a very significant gap coming in between Swiggy and Zomato. Average order value for Zomato at 660 rupees compared to 440 of Swiggy. And lastly, the key comparable here, what's also key to note is the cash balance that both have on their books, because Zomato has 10,813 crores plus the 8,500 QIP raise that they have done. Swiggy has 4,531 crores on the books. Let's quickly understand what has worked out for Zomato in the second quarter. They have various platforms offering various diversified services. They also acquired the ticketing business of Paytm. They launched their district app. They're already profitable. They've also raised funds, so they're looking very solid on the cash flow part as well. And management says that the food delivery business will remain steady and will continue to grow well. Just to sum it up in a nutshell, how was Q2 for Swiggy? It was a good show coming in from food delivery, but mixed performance coming in from quick commerce. The management is guided for steady state take rates to expand to 20 to 22%. So it's going to be a keen monitorable. It's going to be an important monitorable to watch out for. They've also said that quick commerce will turn profitable in 6-7 quarters. And lastly, they expect to turn profitable at a consolidated group level by Q3 FY26. So they've indeed got a long path ahead. They've got a long journey to catch up to Zomato. It's going to be an interesting competition to watch out between both of these players.
If you like this video, then like, share and subscribe to ET Now.